Hello folks, this is Jamie Upson from Stonehearth Capital Management with an educational economic update for the month of October 2017. In this month's video, I'll discuss some of the major headlines that influenced markets in September. I will also provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. As we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most quarterly data, one detail is certain. Major indices performed well between July and September. The S&P, Dow, and NASDAQ all had positive performance last month and gained at least 3.9% for the quarter, and they were each up 9% or more in 2017. Between the recent weather disasters and geopolitical tensions, last month's positive market performance might seem surprising, but rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. Now we will look at what happened last month and what may be on the horizon. Right before the end of September, we received the final reading of GDP, a critical measurement of the economy's growth. The data showed 3.1% growth in the second quarter of 2017. This reading slightly beat expectations and indicates that the economy is growing faster than many people anticipated. But the economy still has room for improvement. Industrial production and retail sales fell in their most recent reading, and the Fed's preferred inflation indicator, the PCE, once again showed that inflation is far from the 2% rate that the Fed hopes to see. Nonetheless, the Fed has stated that it plans to raise interest rates 4 times before the end of 2018. If inflation remains low, they may have to rethink this plan. One change the Fed will be making is to begin lowering their massive balance sheet this month. During the Great Recession, the Fed plunged trillions of dollars into the economy. The Fed now believes the economy is strong enough to handle more normal monetary policy. So far, the markets haven't had a strong reaction to the Fed's long-anticipated decision to reverse its so-called quantitative easing. But we will continue to monitor this action and a variety of other economic indicators throughout the rest of 2017. Looking ahead, many potential changes could be on the horizon, including tax reform. We are studying how any policy or economic updates could affect the markets. Once again, this is Jamie Upson with Stonehearth Capital Management signing off for the month of October 2017. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 978-624-3000. We are happy to talk to you. Thank you.